Bitcoin bubbles as it doubles and doubles and doubles. But commodity markets have serious troubles. Who could make sense of all of these jumbles? It brings old-time analysts like me to mumbles. But before you know it, the buyers will have fumbles. And before each storm, there's always rumbles. This witch's brew could bring shocking tumbles.
Double, double, toil and trouble, fire burning, cauldron bubble.
Hooneth with the baboon's blood, then the charm is fair and good.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market's celebration of the Senate passing the tax bill ended abruptly last Monday. Selling came in stocks and actually had some pretty serious selling into the midweek period. Tech stocks, they had taken the worst of it, and then came around Thursday, a rebound started, and that helped the market come back. The net result was just a barely mixed market with not any really big changes in any of the indexes. Still, there's a lot of choppiness that came in the market, and it does appear to have a character change. The market, which had marched straight up and seemingly is, well, following that path again here on Friday, really has seen some significant stocks do some damage to their overall chart patterns, and it gives us a little bit of sense that there has been some change in the nature of this market. The real show, and certainly a point of some distraction, was Bitcoin. Bitcoin surged and surged and surged as it worked its way up to 16,666. Interesting number. Remember, the S&P 500 bottomed at 666. I wonder if historically that's going to end up to be something significant. A lot of the other places where you could get Bitcoin pricing have some crazy numbers in there, as high as 19,000. I don't think any of those are real. What I look at shows that number of 16,666, and then it moved down in a matter of minutes, $3,000. It traded all the way down to about 13,400, and then had a bounce. I'm going to show you a chart in just a little bit. So this meteoric rise that we've seen in the cryptocurrencies comes at a time when the commodity markets are under severe pressure. In fact, a liquidation going on in a number of the markets. I've read several articles that talk about old-timers like me simply not understanding the new paradigm that we're in. The new paradigm being this time period where Bitcoin is it. And how that essentially is going to take over the world. I have more to say about that. I'm going to show you in a couple of minutes. I want to start out by showing you this 60-minute chart of the S&P 500 this week, and you'll get an idea what happened and what the news items were that were driving the market. Here is that 60-minute chart that you can see right here, and you can see all the way on the left, you will note that big gap on the upside. The tax plan was passed, and the zero Eurozone celebrated the Senate, and all the stocks were moving up here overnight on Monday. And you could see they kind of moved up and flattened out. But then the NASDAQ reversed and some big selling came in here, and all the indexes reversed, and it appeared the tax plan party was over. We had a big reversal, some serious declines in a lot of the stocks in the NASDAQ, and you can see in here that, well, it was a lot of selling that came in the market, and one of the few days where it closed weak. Well, Tuesday it did the same thing. Rally failed again, which is really rare for 2017. There was a big bounce in the NASDAQ early in the day, but that couldn't hold it. The NASDAQ really had seen the worst of it for the week by that point. ADP comes out on Wednesday, up $190,000. The estimate, 190,000 jobs. The estimate was 185, and the manufacturing sector was pretty strong. That gave a lift to the market early on as the NASDAQ again was bouncing, but you could see it flattened out during the day. We had Thursday, world equity markets were really soft at this point. Bitcoin at that point hit about 15,000, but then when the market opened, buying came in, and again it was the NASDAQ rebounding after it had taken a pretty good hit to the downside, but that rally couldn't really hold. There was discussion that there was a deal coming about the debt ceiling, and sure enough it came late on Thursday. The debt ceiling problem is essentially kicked down the road by about 2 weeks, where they have to tackle it again. Man, oh man, you know, if I was in charge, they would never raise that debt ceiling. They would have to come to sensible governance and to run this economy with the money that they have coming in. Of course, that's me, who are quite conservative when it comes to fiscal issues. So the debt ceiling helped, and you got the uptick right over here. Brexit talks had a breakthrough. The Eurozone banks started to move up. FTSE up 1%. That was driving markets up here. Payroll stronger in here. No real wage growth in there. And we had a market that was turning up. But now here, as we move into just an hour or so to go in the day, we see markets stalling and rolling over just a little bit right there. So again, it's an up day right over here. Overall, the markets basically big down, a somewhat return back up, and barely a net for the week as we look at that. So that is a look at the 60-minute chart of the S&P 500. For the week, the stock market, as I said, narrowly mixed. S&P, NASDAQ, Dow Jones, pennies to the upside. The Russell, small to the downside, as that took a pretty good hit early in the week. Bond market, couple ticks lower, nothing much over there. Still overall soft bond market. Dollar up all 5 days. This is not really what we expected. Solid gains. We still think that there is a lot of risk to the dollar going forward, and that this is just an uptick in a down move. Now, with the dollar moving up, the precious metals markets were soft, and the commodity markets were exceptionally soft anyway. So it was clearly markets overall that we looked at, that there was asset liquidation going on in commodities. Well, you know, everywhere that we looked at, there was softness in the commodity markets, except for Bitcoin and, of course, the stock indexes, which had this return back at the end of the week. The gold market down $33, silver market down 67 cents, and we think we're getting to washout period here there. And I'll show you on our short-term charts in the short-term view of that also. Oil, a choppy market overall, and ends up to the downside as it appears that the bloom is off the OPEC freeze rose as oil really does soften during the week. And that's part of this commodity washout that was going on. So let's get back to this understanding of the new paradigm that, old-timers like me don't really understand. I want to show you a few graphics right in here that we're going to look at. The first graphic we're going to look at is the Bitcoin market, just so that we can get a sense for this. If you don't know what Bitcoins are, well, there's tons of stuff on the internet. Essentially, it's a way for people to pay for things or transfer money peer-to-peer. A Bitcoin is essentially a measure of electronic work, of digital work. You mine for them just like you mine for gold, so that gives the sense that there is value. But how much value is there? This is some new charts from a friend of mine, Tim Knight of Slope of Hope, who's growing and growing these free charts and tons of stuff available on there. So I encourage you to go take a peek at that at slopeofhope.com. Here is his Bitcoin chart. Now, I want you to note in here that it's set to cryptocurrencies right over here. And look at, he's got all the cryptocurrencies listed in here. Now, there's like 100 of them, so I don't think he's got all of them, but most of the important ones in there. And you can see in here that, well, I mean, you have Bitcoin moving up just unbelievably significantly of about 1,600% for the year. Here's January right over here, way down here under 1,000, and gets all the way up to this 1,666 number. It's trading at 15,630 as I do this show right now. So you can see this unbelievable move to the upside in here in Bitcoin. So go to Slope of Hope. You'll be able to get his free charts and lots of great stuff on there. And he's adding to the technology every day. So I encourage you to go take a peek at that. So you can see this big move on the upside in there. In the cryptocurrencies, just incredible. And if that isn't bubbly, then I don't know what is. So that's a look at the just at Bitcoin. Now I've got some other points to make about this. As Bitcoin moves up to these incredible levels, if this makes sense, then everything else doesn't. This massive move that's going on away from fiat currencies, essentially is a dollar crash as we look at it related to Bitcoin. Of course, it doesn't look that way related to other currencies. The question is Bitcoin an inflationary tip-off? What the Federal Reserve has done and all the central banks around the world have done over these last 9 years, is that setting off what's going to be an incredible paper money crisis? If that's the case, then there's something way out of whack. How can Bitcoin be signaling this and that be the new paradigm and it be right, and we have asset prices the way they are right now? With a big decline going on in commodity markets and gold, there is something so incredibly out of whack. It's unbelievable. There's some massive disparity. I'm going to show you another chart right now that kind of illustrates this massive disparity going on, where I'm going to look at a chart in here that I'm going to put up that compares the S&P 500 to the DBA. Now the DBA is a chart that shows you the agricultural commodities essentially, and there was often a correlation between them. Now, I did a special video on this for my members where I made a point that some of these commodities were at very important junctures and showed this chart, and I wanted to share it with you also, just so you get an idea of the oddity of what we have going on right now. The candlestick chart over here is the S&P 500. This down over here, way down over there, is the DBA, which is the agricultural commodities. Essentially, it's soybeans and cocoa and coffee and all of the things that we all use all of the time, every single day, and not performing very well. Let's just take a look at what happened historically. Well, generally when the stock market went up, it was because growth was strong and commodities went up too. And they went down together, and they went up together, and they went down together. And then all of a sudden over here year they parted company in around the end of 2013, and the stock market exploded to the upside and the commodity market collapsed. And you could see it's still in a collapse right now. There is a massive disparity right in here. Well, if Bitcoin is right, then these things are absolutely crazy cheap. And if that's the case and Bitcoin is right, then inflation is coming and the bond market is absolutely going to crash. And if the bond market crashes, then what it means, the stock market is going down with it, because the stock market at these levels cannot possibly compete against the likes of higher interest rates in here, and people would be really worried. So there's some craziness going on right here. Now, you might say that you're not exactly sure that there's a bubble. Maybe the Fed achieved what it wanted to achieve. But, the Fed's goal was to make you feel rich. In other words, if you feel rich because asset prices go up, then maybe the Great Recession that they created through the cyclical movement that the Fed creates, maybe that would not bring another crash. Maybe you'd feel rich. Well, that's pretty similar to what other Feds tried to do. Take a look here. This next graphic I'm going to show you gets credit to Zero Hedge, who put this up for Real Investment Advice. Now take a look in here. They call this the everything bubble. What's interesting about this chart is the red line over here is GDP. There was a little blip in GDP back over here during this recession, a tiny one you can't even see here during the dot-com bubble recession. Look at the real household net worth, the disparity between the real estate prices and stock market prices, ETF prices that went up, and the actual GDP growth. It happened here, the markets crashed. It happens here, the markets crashed. It's even worse over here. So the Fed got what it wanted, and essentially it is now as Real Investment Advice calls it, the everything bubble. Just absolutely amazing when you look at that. So what did I show you in here? I showed you the craziness of Bitcoin moving to the upside 1,600% or more over this year. I showed you the massive disparity between stock prices and commodity prices, which really look like they need to seriously correct. In other words, stock market come down or a huge move up in inflation, where these commodity prices move sharply to the upside. Of course, that would be the dollar moving to the downside too. And also this crazy disparity between the net worth that we believe we have because asset prices went up and the GDP. This is a real setup for something significantly changing, and it's something that I think is very, very worth thinking about. Comes 2018 with these huge disparities, I think we're going to see some very different market. If Bitcoin is right, there's a massive adjustments coming, and that's coming to the markets that not too far off in 2018. And if Bitcoin is wrong, well, we're going to see it 3,000 again before you know it, and that's going to shake a lot of things up. We're going to find out about that, but 2018 is going to bring some awfully big moves based on all of these crazy disparities. We're going to be right back as we look at the best and worst stocks for the week. All right, for the best stocks of the week, I just want to let you know you're going to see a lot of charts in here. And if you are interested in having these charts on your Thinkorswim platform, Thinkorswim is the platform that our preferred broker, TD Ameritrade, uses. So if you want to get these charts, we have level 4 subscription, which will bring you all of our charts. Plus, we'll also bring you our rankings and trade setups for the best 80 widely held securities, stocks, futures, ETFs, which we post every single day, and then of course all of our 250 plus videos. So you want to become a level 4 member. We have a half price special for you to try that out, get these charts on your platform. All you have to do is write slim@askSlim.com. I will send you a special link for getting all of that. So you will be just amazed at all of the content, fantastic content that we put out every single week and every single day. 4 new videos every single week, so it's great. So if you like this video, just make sure that you give us a thumbs up on YouTube. Become a follower, a subscriber on YouTube, and a follower on Twitter. And if you don't like it, give me a thumbs down. Make sure you tell me why, because we always want to be better. That's the way we operate here, because the better we get, the better information that we can bring to you. So, all right, let's get to the best and worst for the weeks. Interesting, choppy week that we've had here. That has really not given us a lot of stocks overall to look at. First Solar is in the solar category, is the first one we are going to look at as we switch over here to our weekly charts. Our cycle analysis that you see here is the basis of it is done on weekly charts, and then we carry the analysis over to daily charts. And then we do some of the analysis, and some of our proprietary indicators are also built on intraday charts. But First Solar, we made a point that the solar stocks were getting hit based on some fears that that President Trump was not going to be putting tariffs on the Chinese solar panels because he needs them for North Korea. He needs China to stand up against North Korea. So they were moving down. And we said that, you know, First Solar had fantastic earnings, and we thought that it was going to be driving the group back up. And sure enough, it did. They guided up, and they drove up the rest of these solar stocks. That's what we're going to focus on right now. Here is First Solar. Now, it had a huge upgrade to its earnings, and then they upgraded again. So these earnings estimates have been going up. Now, the forward PE at $1.47 is still at 47. So they're expecting better earnings this year and then kind of a drop-off next year. So this is getting a little high-priced for us. We expect it to pull back. You could see our projection here into January, maybe getting back to about $64 at that 23%. So on stocks that we cover, which are about over 300 of them, we do this cycle analysis. And if it's not in the 80 key ones that we do, then, you know, our members just ask us for them, and we're glad to send any stocks to them with our analysis on it. So that is First Solar, and you could see the move up. We think that it's really getting overdone in here. As they guide up, it pushed the stock up 15% on the week. Just a giant move in there. SunPower. Now, I have gotten so many emails this week on SunPower. It's unbelievable. I can't believe, maybe because it's cheapy stock, there are a lot of people in there, and we're wondering. Now, we've been saying that we thought it was still okay. It would have had to break under this level, about 650, to have any kind of a breakdown. It actually got down here to about 706, but now you could see it's way up here at 863. Our objective has been initially upper this area near $9, and then ultimately getting way up here near 12. So that's the top of this upward channel that's going on. It built a beautiful base in here, and now is in this what we call green rising phase right there. We put that in some of our charts so you get a little clearer picture. Look at their earnings projection for 2017, 63 cents. Their PE is 10 versus what I just showed you in First Solar. So you talk about value, relative value. This one certainly has it. Don't take it as a buy recommendation. I tell you the stock looks positive, and the rest is up to you. CSIQ, you can see that right in here. This one is really curious because this decline that we had this week really comes at this declining phase in the cycle right over here. And you could see that now in the first week of December coming, it's due to turn up. Notice the decline, the rally, the decline, the rally. Beautiful, huh? And then the decline, and then the rally, and here here we are again. So it comes down here, test the 34-week moving average. Note the whole moving average is bullish right there as it is moving up in green. We think that CSIQ, which is only a PE of 11, is really going to be in good shape. Note that this was in our list of best for 2017 as it moves up from 12 to about 17. So you can see that's about a 35% gain. Also, First Solar FSLR, let's just go back there so you can see, was on our list of best for 2014. We picked 14 stocks that we thought would do fantastic, and this one you can see moves up from 32 all the way up here to about $70. So that's over 100% gain for the year. These are two of the best stocks that we had for the year, and we would say that there were some that we missed pretty badly also. But you're going to want to catch our year-end show where we give you our best and worst stocks for 2018 coming up. So don't miss that one. So that's a look at solar stocks. Retail stocks, Lululemon was the best one in there as their earnings were, well, strong, really strong. And that was a good reason for the stock to gain strongly on the week. Now, it's at a very key spot in here when you look at Lululemon. Here is what we call the 100% fib extension level. That's often a target between the 78 and the 100% extension. And what does that mean for people that don't know? Well, it essentially means that you see this low here and this high here. Well, then 100% of this distance is right here. So that's what that means, and often you get up to that level in very strong stocks. Very weak stocks will make double tops or stop at maybe the 123%. But when they're this strong and this powerful, I mean, that's great. And it made an early low, which is also a good indication. Note it stops at the intermediate support zone. So that's all the analysis that we had in there, and it brought this big upside move in Lulu. We thought it was moving positively. Note the whole moving average, solid green, and driving it up on the upside. Now, I didn't really want to show daily charts in here, but I want you to see right in here that we have cycle analysis on daily also. And look at this giant upside gap in here on massive volume where it moves up on that strong earnings. Note that high volume moves like this, where they kind of reject, as you see right there. Those are often tops. When you have those high volume gaps, they start something or end something. And we think that based on what we're seeing here is the 100% right over there, we think that, well, it's likely to stall right over here at that level. DIX DKS is the next one we're going to look at. And you could see it moving up in here towards that resistance zone. You can see that, well, this was kind of an early bottom in there, but it gets a nice rally, and we don't think it's going to get much above that zone. So we consider this to be still a negative stock. Trouble spot, 7% gain on the week. AEO also in a trouble spot. This is a resistance confluence that comes off of these peaks right over here, and you can see in here the nice cyclic action right there. So note the low right over here. You can see that pointing there and pointing right here and here and here to look at the cycle rhythms that you see in here. And this was a beautiful upward cycle that called for another rally, and there it goes. That's how cycle analysis works. It gives you a great feel for market condition. Last group that we're going to look at on the upside is the steels right in here. You see US Steel X, which we have been positive on. There it is in that green rising zone, the rising whole moving average, and there's that 100% extension. So it's at the major 61.8 and the 100% extension. If I were long the stock, this would be the place that it would make me nervous. And I would say, well, let's look for the pullback to the support zone for the next rally, because you can see in here, looking at the cycle rhythms, you can see the low right over here and the objective of the low right over here and the projection. It should do something like this. And then the next rally right over here, this would be our buy area right there in US Steel. That's a beautiful look at cyclic charts and how nice you get a feel for these stocks. Now you can see in here, look at this as it moves up through these resistance areas. and moves to a new high. This is Steel Dynamics, gains a strong 6% on the week and gets to a new high. Again, we're looking for it to pull back into January based on the rhythms that we see in here. You can look at all of the corrective periods. The blue is the DBB. That is the base metals right there. And if you look at corrective periods right here and here and here and here, that's where you get the corrections, the sell-offs, and that's where we are right now. So we think it's about to pull back, and we think that about a lot of stocks that we see in the market. AK Steel up about 5%, Nucor up about 4%. Those stocks do not have as good a patterns, and we'll be looking for pullbacks in those also. So that is the best of the week, and coming up now is the worst. All right, my little friend there calling for the worst of the week, and we're going to show you what with the commodity market liquidation that's going on and the weakness that we saw in the energies, in the most of the commodities across the board. Cliff was the worst stock of all, and we're going to take a look here at CLF, which is a stock that I've been believing is going to be in good shape. And down the road, it's very, very possible. When you look at this pattern, it's actually hard to make a bearish case out of this, even though the stock was down 8% on the week. Here is Cliffs. Now, you see that base that's built in there after that big decline, and you can see the cyclic rhythms in there. Now, it's a little bit off rhythm with the DBB, and, you know, that could cause a little problems in here. As long as it stays above this 560 area, to me, it's still in this upward channel. I think Cliff is going to be a very good performer next year. Again, as long as it holds that level. If the base is broken, then the pattern will change and the story will be different. So they came out with a note offering this week, and that pushed the stock down. Now, I don't generally, when something like that is digested, then the stock recovers, and I think that you can see that happen here in Cliff. So our pattern is suggestive of the fact that it is going to move back up. Now, energy stocks took a hit, and natural gas really led the way. Now, natural gas, the future, has a breakdown, and it really looks bad. Take a look at Chesapeake in here, and you can see this Chesapeake pattern really points to the downside. And here's a good example of a breakdown. In other words, it breaks this low, it sets up a negative trend, it does it again on this cycle. It actually broke it right over here and sets this negative trend, and you can see Chesapeake moving down. This is, of course, a stock that really sold itself out, and it could easily get down to $3 as they just have emptied themselves of a lot of their assets. So that's Chesapeake Energy. APA is one of the giants here in the natural gas category. You can see in here that it looks like a decline into early January based on our projections. It has these negative cycles going on, and usually a negative cycle gets you a negative cycle. You see this one here and this one here, and this one actually holding up nicely. So if it can hold above that support in these next several weeks, then a base will have been built and it can come back up in here. We'll see if it can hold, but again, it looks like it's got some trouble over the next month or so, down 6% on the week. In the drilling category, Schlumberger was down 3% on the week. Look at the negative pattern in here, and this also points to a decline down into January. Let me just get a closer look for you to see right here. You could see it rallied right into the resistance zone and then sold off, and then actually turned negative. So we're looking for it to continue to have weakness here for about, we'll call it 5 or 6 weeks, based on the timing of this pattern into January. Similar patterns that we see, but potential bases being built and better patterns in Noble Corp, NE, and Transocean, RIG. Take a look at those for potential investment type setups, I think, coming in the next 4 to 6 weeks, if I'm right, and we continue to get some pullbacks in that category. One stock that I have hated that has gone down lots of times when we've been short it, and then recently did better, now has got a complete breakdown. And this is one of the great patterns that I love to show when you get a breakdown like this, because it sets up a long decline. This is Yelp, and if you understand cyclic movements, in other words, the waves in the market, you can see in here that there's, note the nice looking diamond right over there, right? There's an important low right over here and right over here. And then this low set up a very bullish pattern. In other words, this was a long rally and a little decline. You can see that. Sets up to go to a new high. It did that perfectly, but then it broke. It broke underneath that key low, and that sets it up for a decline into March. This stock is in horrible shape. Analysts have downgraded. I hate it. I don't think that they have a model that they have figured out how to really monetize. Their earnings estimate for the year is about 35 cents. I think that's optimistic, and that would put them at a PE of like 110 right now after this decline. So this is an extraordinarily high price stock, and I think the stock is headed to the downside in a pretty significant way. It's trading right now at 40, falling from 48, and the best case I can make for it is 35 on the in this period of months that we think it's going to decline. It could do a lot worse than that. The next group that we're going to discuss is the home builders. Toll came out with shockingly bad earnings after having moved sharply to the upside. You know, Toll is kind of a luxury home builder, and everybody figured that, well, they build luxury homes and we all feel richer now, right? Because we have all of these asset prices going up. Well, this stock really has what I think is a major top in place in Toll. So here is the pattern that we see in there. You can see these cyclic patterns and the big engulfing pattern right over there. That creates a pattern right in here of a big gap. I want to show you that right here. This points to potentially coming down a little bit and bouncing. All of this upward momentum has now been lost. So what you're looking at in here is our momentum indicator, one of our favorites, the slim ribbon right there. It turned green right there, and you can see it turns green with the stock right around 40 and takes it all the way up to $52. Even in this little correction, it never lost its upward momentum. It now lost its upward momentum right there. So with this big downside gap that it just can't seem to fill, this triangular shape being filled right in here, formed right in there, that says to us that Toll Brothers really looks like a sick looking stock. So we think that it's going to continue on the downside. $43 would be our target in there over into January, and then we'll see if it can get any kind of a real return. Sales in there moving to the downside. We think that was a crazy high that it had there on the upside. Note the major fib that it stopped at, a perfect point for it to stop right there. Pulte Home, Lennar, and DHI, D.R. Horton, all of those three stocks all look like they're stalling to us. Now, none of them have sell patterns yet, but they all look like they're stalling to us, and I think that it's worth considering that, you know, kind of ugly looking pattern in Pulte in Toll may be setting up the group for a corrective period. Gold moved down $33 on the week. It hurt the gold stocks. I just recently did a special on the gold stocks where I said that, you know, there was a period that they were going to struggle here, likely into potentially in January, and I think that, you know, we're getting proof of that as we're looking right now. Here is the one that was down the worst, AU, which is Anglo Shanty Gold. You could see it's got a wedge pattern being built in here really over the last year. Been trading to the downside. There's about 3 more weeks left in here, and then we think it turns up. The gold patterns basically mostly point to declines into January, or weaker periods into January before they get an upward turn. So that's what we see here in AU also. We think that in the next few weeks it's going to be very investable though. GG, here's the same pattern. It looks like it comes down into the January period. Newmont right over here. sorry, NEM, you can see looks like it comes down into late January. That's what we're looking at right there. So overall, this period sometime in January looks like the period that we're going to get the bottoms in the gold stock market. That's it for the worst of the week. We're going to be back with our ever popular and a surprisingly weak job that I did last week in our short-term view. Stay right with us. All right, short-term view for the coming week. Do this every single week. Take a look at the short term. In other words, we look at the daily charts. We look at cyclical patterns and do our best to project. We rate ourselves by the shape of the pattern, whether we thought it was going to be up or down, support and resistance levels. So there's a lot of ways that we rate ourselves, like 15, 20 different pieces of criteria that we look at. We generally try to get in the area of 65% on average correct. This was my worst week of the year. Absolutely clearly my worst week of the year. I would say my accuracy based on all of the criteria that I just showed you was in the area of, well, 15 or 20%. This was, a week where the stock market was choppy, and it came down, very close to where we expected. Well, it didn't quite get down to that level. But the overall problem, and I still don't have the right notes in front of me. Let me get these up for you right now. The overall problem is that we did not see the commodity liquidation that went on coming at all. The only thing that we got right was the early decline in the stock market that we expected, and kind of half right on the bond market. The light crude market we were wrong, the dollar we were wrong on, the precious metals markets we were wrong on. So this was probably the week that we want to make sure that only happens about 1 in 10 where the patterns follow as poorly as we saw this week. Whenever that happens, we kind of just bear down and look at everything again, and you can see the amount of work that I do, that we do here, where we do this analysis. So if we can keep at that 65% level or get back up to that level, we're going to be happy about that, and we're going to do the best that we can to do that. So we're going to start out in the light crude market. So light crude got to bounce up into the resistance area. We thought it would be a choppy up week in there, and well, it was a choppy week, that's for sure, as it fell early and then recovered, and we expected that it was going to be able to get up near 59, and that didn't happen. The high of the week was about 58.40. So we missed that, and that was really early in the week. It didn't follow the pattern we expected. So you could see in here the clarity in the shorter term patterns in there that we expected. We kind of expected that it would fail early in the week and then come down based on this. Well, it failed early in the week, but it didn't get as high as we expected, though overall the pattern remains in place. For the next week, we expect a narrow range. The decline early in the week potentially coming down to this area of about 55.80, and then a return back to the upside looking for around 57.90. So you can see we have really a narrow week that we're looking for right in there, kind of hanging in that area. Down and up is the way we have our note drawn, and we could see it pretty much stuck in that tight range. And with commodities, struggling, and the OPEC news already out, well, I could see that it could likely get stuck there. So that's a look at light crude. Now the dollar, which is $DXY, this pattern in here is a surprise to us. Now you can see this little shortening pattern right here as an alternative, where it made the low early. Generally early lows are positive, and you can see it started to move towards the upside. Even gets up past the 78.6%. Now, that doesn't change anything in our big picture analysis of being negative on the dollar. And also, it doesn't change this analysis, which suggests that it's going to pull back in here, well, all the way here towards January. So right now we're in this rally and then coming into this corrective period. So we think that we're going to get a move down in the dollar. We're going to call it a down week in the dollar. We don't really have the top suggested in here. We think that right over here, the 89-day moving average, which is at around 93.35, is a likely place as a best case on the downside in there in the dollar. So I don't really have anything established other than in levels yet, other than that, and then the likelihood that it is going to move to the downside. Sorry about that. /6E is next. Now, in this case, we had a little stretching out, a slight right shift in the market as this corrective period extended. Now, you see it's really in this minor buy zone, and this really gives me an idea that the dollar, which is inversely correlated to the euro, is likely to pull down, because you could see this cycle rhythm right in here, which is bullish. In other words, this was bearish because it made a new low. This is bullish because it didn't make a new low, and we're getting into this positive period. So we think that we're going to get a rally in the euro also. Now, we don't really have the low established yet, so I don't really have a target. But again, up around over here, looking at the 89-day moving average, it should surpass that up around 1850 on the upside. So we expect the euro to have an up week. We expect the dollar to have a down week. Now, the gold market, /6E, this one is making me work. I mean, really, to figure out all these patterns. Now, there are a lot of cycles that you're looking at in here. Just so that you understand, this dashed line is the GDX right there. This silver line right over here is the silver market. The silver market actually pulled straight down to that point right over there, and this gold market extended a little bit further to where the silver market should go. Now, we have a negative pattern in here that is shaped up. We're looking for an up week in gold. We're going to look for it to get up to this 1266 to 1273 area. We're not overly optimistic that it's going to do a lot better than that, however, in this overall pattern, and with the likelihood that we're going to have some struggle still out into the January period. So this is a bounce that we're looking for, 1266 or a little bit better in the gold market. /SI is the silver market. And this pattern in here, you could see the bottoming coming in right over here. Now, our OBI indicator, option bias indicator, gives an extreme oversold reading right here on this day. And that tells us that it's a very strong likelihood that we're going to get a bounce in here. Those come about 65% and pretty immediately. That we get very, very good signals in there. So that gives us a reading that it's very oversold. With the likely euro bounce, the likely dollar pullback, we think that it's pretty probable that we get up to the 1635 area. Now, this one might do it this week. It could go into the second week before it gets that, but we're still calling for an up week in the silver market. The next thing we're looking at is the bond market. Here's the /ZN. Now you can see how sluggish this is. Now, we had expected that we'd get a test in there and of support and right around of resistance, right around 2430, and then pullback. And you could see it didn't quite get up to the level that we thought. And we thought it would be a small up week in there, and it's actually down a couple of pennies, so a couple of ticks. So we're not that far off, but it wasn't able to hold the rally that we expected. It looks like a choppy pattern in here, really. Small rallies that fail, we can see that it's likely to get some kind of an uptick into this area and then move back over here. Again, we're kind of looking for narrow range in here in the bond market this week. Well, that's going to mean we're going to have some indication by how the stock market acts. Now you could see this on the 30-year. This one has had an upward trend, and you could see the small patterns in here are just spot on, right? Here's where you had the sell signal and the evening star and then rolling over. So again, we think we could get a little upside in here, but basically in here we see just basically a chop and a small week in there. And we're going to call these just small weeks in the bond market, trading like between these levels right over here. We don't see anything big going on right there. Now, when you look 2 weeks out, you can see the upward turn right over there, and that's probably where the stock market downside correction is going to pick up, if you believe that there's going to be a downside correction at all. So we're going to call the bond market just small movement, rallies fail, and just really a small week, which is going to set up a more positive period after that going forward. So the stock market, we expected, was going to move lower. It did move lower, and the S&P 500 did not get as deep in the decline as we expected. And then Friday, up day, kind of erased the fact that it was down for the week, just as we expected it to be. So we don't get a lot of credit for that when we don't get the directional aspect of it right. Overall, pattern-wise, we were close. But we did not expect the big uptick that we saw in at the end of the week. Now, that puts certain things in question. Now, this is interesting, and for our chart subscribers, I'll be sending this out to you, the changes that we made in the precious metals and the indexes that you're going to see right over here. What we have in here is the S&P 500 pattern overlaid by the Russell pattern. That green one right over here is the Russell pattern. This blue dashed line over here is the S&P cyclical rhythms. These are the ideal rhythms. There's always variances in them. You can see in here that this is where the Russell was due to turn up, and that kind of is driving the market right over here. So our question is it going to follow the Russell and then turn over and have a big decline over here? Or is it going to follow the S&P 500, come down early in the week, rally, and then come down over here? So you see the Russell and the S&P are due to fall out over there. But the question is really over this next week, and those people that have option positions on that need the market to fall, that have been writing me, this is kind of a convoluted type of analysis that you're seeing in here. We see a choppy period here over this next week, and then after that the risks pick up out over here, and this is a period of extreme risk that we're going to be getting into out there in December. Nobody expects that in December, of course, but these patterns are suggestive of that. So we're going to call this next week an early decline and then another attempted rally right over there. That's what the pattern suggested. There is minor support here at around 2637 right there. That would be a pitifully shallow decline if that happened, and this overall decline would be just another what we call right-hand translation. In other words, it moves up for like 2/3 of this cycle and then has just a pitiful little decline. Well, that's exactly what happened here, and then moved up again, and then it has another rally. So the depth of this decline is important, and the amount of this rally is important. We're just going to look for a choppy week, a test of 2637, potentially getting down to 2623 right over here, and that's not really a very big decline when you look at that. And the further we get into December, I think the more risk that we're going to see of a late correction coming up in the next couple of weeks. So that is the look at the S&P 500. We're going to call modest decline in here that really doesn't give a lot of downside. Boy, I hope I'm wrong and they just accelerate to the downside and then solidify the pattern that we see in here. So you can see that in the S&P 500. NASDAQ, I've overlaid the same chart right in here. You can see the how the Russell overlays to the NASDAQ and the low that was set in here. We're looking for a pullback early in the week there, and then moving up again. Could get as low as this low right over here at 2632. It doesn't have to. It could stop here in the slim ribbon and then again follow that Russell pattern, have some choppiness right in here before we get into this much riskier period over there. So choppiness is what we're looking for. I hope it's a wide chop and we get some depth of decline and it's much more tradable. We're going to call it a minor decline into midweek and then some kind of a recovery, that being setting up a time period where the risks start to increase even more about a week out. The VIX, VIX, I didn't even plan on putting this one up. It is just unbelievable how it is following this pattern right in here. You could see that this dip right here is getting right near the end of it. So we said that we thought the stock market would fall for a few days. We think that the VIX will then get a pop. Maybe Tuesday through Thursday right in here is then what we're looking at the VIX. The VIX has got very consistent cycles, and we're going to look for the overall condition of the implied volatilities to give us a much better trading opportunity coming into the end of this year, beginning of next year. We still think that we're going to see implied volatilities jump very significantly this year before that's over with. So you could see the nice rhythm in there, and maybe another day or two, and then we can see implied volatility start to move up again. That is our short-term view for the week. I hope there's some information in there that is valuable to you and that you are able to make some money during this week based on everything that we shared with you. Don't forget, you want the charts that we show you, write me an email, slim@askSlim.com, and I will send you a special half-price link for our level 4 subscription. If you are watching this on Twitter, make sure you give me a thumbs up, and if you don't like what you saw, tell me why. Just want to know so that we can get better. And follow me on Twitter at askSlim. That's it. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit